Hello everybody and welcome to the ESG and Tech Show. My name is Susan HayesCulleton and I'm delighted to be with you today. Well, hello everyone and welcome to our new ESG and Tech Show right here at VectorVest. We are delighted to have you here with us, and as always we would love your interaction right throughout our conversation today so that we can talk about not just technology, not just sustainability, but both of them put together, as well as the investability of both as well. Now, as we often do, I'd love to hear where you're tuning in from. So I have the show streaming over here on my phone so that I can see what people are saying and where and so on. So can I ask you, if you're on your phone, you should be seeing the video up there at the top, and underneath then you should see a button saying live chat. If you press on that button over here, which I'm just doing there right now, I can now see all of the live chat. So will you just pop in there, tell me where you're tuning in from, how are you doing today, and we're also then just going to have a quick chat about what your thoughts are on this topic. So first of all, I can see there VV Nation. We will be live in 1 minute. Yes, indeed. We just needed a moment just to get a couple of things going on there. Hello, William. I see that you're tuning in from Chicago. Fantastic part of the world. And you know why I think that. Let's just see there where everybody else is tuning in from, and then we're going to settle right into the conversation. So I'm keeping an eye over here on the chat. I'll always make sure and do that so that I can respond really quickly to that. Hello, Margaret. You're here tuning in from London, UK, and you're glad to be back. Hope you're well. I am indeed, Margaret, and we're really delighted to have you. And thank you so much for being both a supporter of this show, the ESG and Tech Show, as well as Fantastic Female Fridays. Great to have you with us. Larry is here and he is tuning in from New Brunswick in Canada, part of the world that I haven't actually been yet, Larry. I was with VectorVest on the Money Show in Toronto. Oh, I think it was the year 2016. So I haven't been back to Canada yet, but I will do my best to make sure to get there soon. Okay, well, keep your comments coming in. We're only delighted to hear from you, and we're delighted to hear from you about this topic, which is all around sustainable property. Now, here's what we thought we would do today, is that we're going to look at how tech and property are woven together, and particularly how that happens is through the Internet of Things. Now, if you were on the last episode, and the last one, of course, is up on YouTube, we particularly looked at the 5 trends that are underpinning ESG and tech, but one of them that we spoke about was the Internet of Things. Now, the Internet of Things is how devices capture information and send them to others. So I'm just going to give you an example here, right? So right here, you can see right there is my smartwatch. And right up here, I was looking for my phone. Obviously, it's up there. So the phone is up there on the stand, okay? Here it is. This is the phone over here where I'm actually bizarrely watching myself. Now, when I do exercise, I was out for a 20-kilometer cycle last night. I'm trying to build up to 80 kilometers in a day for a cycle where a couple of my neighbours and I are going to take on one of the greenways in Ireland. And the information was gathered on my smartwatch. So it was gathering my heartbeat and it was gathering a range of other things and then sending it directly to the phone. That is the Internet of Things, how things communicate with each other. Now that's one example, okay? That is one example of what you might see or what you might see on a regular basis. But what I would like to talk to you about is where that happens in your home and how you can see lots and lots of examples of where that might be. So what I'm going to do now is I'm going to share my screen and I'm going to take you through a number of IoT products that might happen. Okay, thank you very much indeed. Margaret says it's her pleasure. Well, it is actually my pleasure indeed, Margaret, instead. Okay, so let me do that right now. Okay, now, and I am just going to make sure here that I am going full screen there. Okay, very good. Now, so what you can see here is the types of Internet of Things type products would be home automation systems. So just think about what they might be. They could be things that like thermostats, for example. So I am setting the type of temperature there for the heating system, whereby it's not going to turn off because of a timer or anything. Instead, it is going to turn off based on temperature. Computerized traffic lights, that was one we spoke about before. we spoke about that last time that you were on the show with me. Hello everyone, by the way, I see that there's lots of new people joining. You're super, super welcome. And please just pop into the chat there where you are tuning in from. We'd love to hear from you. Computerized traffic lights is, you basically look at the traffic light. The traffic light looks at the oncoming traffic and then it moves to red, amber or green according to the traffic that's there, as opposed to, again, on a timer. Hospital medical devices, that could be specifically, again, a sensor. Maybe it could be about a child moving to in a cot, or of course another device would be a pacemaker. That could be in somebody's heart as well, that would say if their heart rate is going too high or too low. Wearable health monitors, I've just shown you one, right here. Cloud sharing programs. Now, I said, a cloud sharing program, how does this happen? Okay, so you think about accounting technology, and this is one that I use in terms of managing our own accounts, right? Is that if I'm uploading something, let's say that I'm uploading the expense for this laptop, I'm going to upload this expense in a cloud, into the cloud, and then it automatically gets updated on the other side, let's say in the US. However, the way in which that can also work is that we can see how, I'm just going to stop for a moment. Can I just check, are you seeing a slide on my screen, or are you simply seeing me? Because I think, oh, hello, S. McClintock is from Southern California. You might just pop it in there to the chat, whether you're actually seeing my screen, where I'm sharing some elements here. And you know what? I don't think you are, because I didn't share it. Now, there we go. Apologies about that. Here we go. Now, there you go. Now you can actually see what I was hoping that you would see. Okay, perfect. Right. So in terms of, now, there we go. That's much better indeed. So you can see there, home automation systems, like I was telling you, computerized traffic lights, hospital medical devices, wearable health monitors, like I was saying here, cloud sharing programs. So just now, if I can move over here, and I'm going to move over here so that you have more of a chance of actually making sure that you see the text here rather than any other way. Okay. Now, particularly when we look at the cloud sharing program, so let's say that I'm going to upload a receipt there to the accounting technology that we use here at VectorVest, and then it gets received across. Okay, now that's all good. But if I was to simply scan that into the phone, and I can do that, we have the technology to do that. That is where, again, one thing is talking to another. Self-driving public transportation. Did I ever tell you about my friend Tracy? Yeah, okay, I can see now that S. McClintock has just told me that you can see me now. That's perfect. Or that you can see both slides. Did I ever tell you about my friend Tracy? Tracy is somebody that I'm friends with. She lives in San Diego and she drives a Tesla. Beautiful Tesla. And Tracy has told me, like, the last time I was over to see her was November 2019. And at the time, the car, her Tesla car, could not, it could spot stop signs. Sorry, it could spot traffic lights and react, but it couldn't spot stop signs. Yes, I have that correctly. And with the next update, that changed, and now it's almost like practically autonomous. It's almost at that stage. But that is where the sensor within the Tesla car is looking out for the traffic light. It's looking out for the stop sign. It's obviously looking out for people. And even if we go a little bit further, if we go back a little bit, again, even in my own car, I've got a, what do you call it? Responsive cruise control. That's what it is. It's where the cruise control doesn't operate. My previous car had cruise control where you put in a specific speed, but you had to amend the brakes. Instead, this is one whereby it reacts to the car in front of me. And do you know what I would compare that to? Is I compare that to having a trailing stop loss. That's what I said one time when somebody was telling me about this for the first time, a good number of years ago now. I said, it sounds like a responsive or an adaptive or trailing stop loss, is because rather than responding to, right, we're going to close this out at $40, is that it says, right, we are going to close this out if the share price falls by 10% or so on like that. Okay. So self-driving public transportation is when you would have a piece of public transport that basically drives on its own. The one time I've been in one of these, it's a good while ago now, but it certainly could spell the future. And that is when I was in a hotel in London, pretty sure I was in a hotel in London. And when I was there, they told me that the system of transport to get to Heathrow it was only like, I don't know, 10 minutes walk or something, but it's going to be some ridiculous 4:30 in the morning time that I was going to be leaving the hotel. I had to push they said go down. It operates like a lift. You push a button, and then this pod was going to come to the door. It was only ever going to be 30 seconds away. You get into the pod and you push another button, and then you basically get to the airport. It was like a horizontal lift. Again, that is a basic form of self-driving public transportation, because there's only 2 places. It's not like a tram that has to go around and spot things happening and so on like that. So that's just an example of, I would imagine in the future we can push a button and a self-driving car could just appear, in the same way that we can do that now for taxis or Uber. And then the other things, I'm just going to make sure that you can see there. Okay, the other things other examples there are smart factory equipment, wireless inventory trackers, and also air quality sensors. Make sure, now there you go, you can see everything there. So smart factory equipment, wireless inventory trackers, and air quality sensors. Just to give you again some examples of those. So a company like Medtronic is a company that focuses on medical devices, and Medtronic is now putting technology in place, and has technology in some parts of its supply chain, whereby the machines are telling the humans when they need to be serviced. The machines are telling the humans. And you might say, wow, that's pretty cool. The thing is that, haven't we seen that before? If a light comes on in your car now, one came on in my car there about a month ago saying there was an excessive oil level, for example. The machine was telling me, I need attention here, Susan. And yes, I took care of it. But the point I'm making here is that these sorts of technologies that we've seen them at a basic level for some time. But as time goes on, it's how property is going to engage, and real estate is going to engage with the Internet of Things as things move on. Now, can I just ask, what type of smart devices are actually in your homes? I'd love to just see it there in the chat. Let's just see. Thermostats, for example. So any type of smart devices. Let's just see what you come up with there. Any other type of smart devices? Now, I would consider my Google Home, for example. Some of you might have Alexa, or you might have a different one. That would be a device as well. That's not necessarily the internet of one thing talking to another, but it's voice activation. So let's just hear what type of devices are in your homes. Just going to wait and see there. And I'm going to see how it comes in on the chat. Again, I'm just going to go back over here. Thermostat, William says, yeah. And I'd say you'd certainly have need for thermostat in some time of the year in Chicago, all right, William, for sure. Let's see what other people say here now. Is there any other thing? Like, if you think about it, anything with the timer, about anything that is responsive to a sensor. You know what we used to have at home years and years and years ago was simply a sensor light. So that of course that was an anti-theft mechanism, which is like, and then of course if a cat walked under the sensor and then turned on the light, get a big fright the first time. But all of those things are various types of Internet of Things products. This is where the thing is communicating across the internet. I'm going to give you one more on cloud sharing programs. If you think about it, right? If you think about it, accounting technology that is able to connect to a bank, right? So that's also another piece of technology that's lots of existence in companies like Salesforce, etc. You take the technology in the bank and you connect the technology to the accounting package. Put the two together, and when you do that, then what actually arises as a result of that is then the technology can screen down what's happening in the bank, and then it can link it to invoices and do a variety of other things. They're all examples of cloud sharing programs. Margaret says here, thermostat and security light. Yep, exactly. And Margaret, that's the thing, is that a lot of us might be in that similar scenario. Okay, right. So now when we think about the Internet of Things, let's think about, and we are going to really dovetail this down right into people's homes, but let's just take a look at this. First of all, the market is projected to rapidly expand in the coming years, rapidly expand in a variety of ways in the coming years, and we will have a chat about how that might happen. Okay, now I'm going to move out of the way there so you can see these figures. So CAGR. If you're familiar with that term, you might pop it into the chat. CAGR, what does that mean? Let's see whether you're familiar with that term. It's a really important term to be aware of when it comes to looking at returns over time. I've given you a clue there. Does anybody know what CAGR means? I'm going to give you the answer anyway, but let's just see if you are familiar with it. Okay, right. So it is compound annual growth rate. It's compound annual growth rate, and it is a very important. It's an acronym that's just very handy. Now we have it within VectorVest as well. So for example, if I'm going to pop on over here, and let's say I'm going to look at my back tester. I'm going to look at my back tester here, and I'm going to look at this particular back test. Okay, you can see here a back test that I was running where I was trying to extrapolate what the return of a certain system will be. Look up here when you see annual rate of return. So annual rate of return is when you're looking at the rate of return on an annual basis, simply 1 year over the other. But compound rate of return, now that is the one to watch. So compound rate of return is the rate of return that happens on a compound basis, as distinct to annual rate of return. You can see here that it is typically lower than the annual rate of return, because you're seeing the actual rate that compounds the growth. The annual rate of return includes the compound growth. Okay. Now, back to the Internet of Things here, is that it's a highly competitive and fragmented market, but it's the largest and fastest growing market is that in the Asian Pacific. And we can see that. And just think, right? Just think through why that might be. Okay, let's look at China for a start. People in China, when they think about technology, they typically think of phone first. They typically think mobile first, because when they are looking at different type of technologies that they're working on, they didn't have laptops, they didn't have desktops. Is that they've just leapfrogged directly into it. And I saw a very interesting statistic the other day, is that China could actually be the first economy in the world where e-commerce activity will be greater than that of the traditional retail experience. There will be more money spent online than in person. For the first time in history and anywhere, it would be China. So might any of us be surprised then when we see that there is so much focus on technology, and particularly like accessible handheld devices that are making these waves? Okay, so here's a couple of other points. The success of the Asia Pacific strategy is largely due to its focus on the development of smart cities to aid growth. And again, I'm going to refer back to our conversation on smart cities in a moment. China is expected to remain dominant through government-funded expansion industries of robotics, autonomous and electrical vehicles, artificial intelligence, biotech and aviation. And India is also expected to make headway due to the Make in India policy and plans to build smart cities. Now, let me just go back. Could I just reach out to the guys there back at HQ? Hello, Joey, and hello, Clay. Could I ask you to please post the link to the previous episode, which was the first ever one of the ESG and Tech Show, please? That would be great if you might just pop it into the chat. So if anybody, I spent, I'd say at least 20 minutes of the first episode where I delved specifically into looking at smart cities. So that might be a helpful element. So I'm just gonna have a chat with you there myself while we're waiting for that to happen. Here we go. Okay. Now, let me just think about the interaction between smart cities and property. Smart cities enable individuals to live in an environment where technology can help improve the city's living. Okay, and I'm just checking there. I'm just going to keep an eye on the chat there so that then we can see as they come in. So, for example, the traffic light system. The traffic light system that is based on the sensor of when a car is coming, as opposed to, on the other hand, whereby simply a timer, since we're going to have a red light now for a period of time and various different things like that, is instead using a sensor to manage when that might happen. Or when you might turn a green light because the traffic flow is clear. What is the benefit of that? Well, the benefit of that clearly is that you decrease traffic jams, you increase the speed at which people can move around a city. And also the other beautiful thing about this is that you can capture the data so that then maybe there might be other things that you need to put in place, like traffic management systems, alternative routes. You can also maybe capture the data about how many cars are passing per minute, in which directions do you need to restructure how traffic moves. All of that is related to smart cities. That's what it's for. Now, I'm just after checking here, and there in the chat indeed, the guys have put the link to the last episode. So I expanded much further on this. there. So since then, if you think about how a city is changing, well, then think about how a city, right? So just imagine this. Imagine then if your sat nav in the car can connect directly to that network of city traffic lights. Because actually, if you think about it, isn't that what Google Maps does? Google Maps will tell me the fastest way to get from A to B based on the existing traffic. So now let's just think about how an individual house can actually check in then and link in with a smart city. I'm going to give you one example, right? One tiny example of how this can work really well, right? There is an organization in the US whereby it's a printing company. The printing company connected with the guard or with the police station. And when missing people notices went out in a certain environment, the printing company, just think about this now, the printing company connected its network of printers to the police station so that a flyer to announce that that missing person was missing could actually simply be printed in all of the printers in the region. So therefore the smart city was connecting to the smart home devices in order again to improve the lifestyle of all. So that then of course, rather than sharing on Facebook or a radio announcement, it actually used the printing network within its entire city to do that. And there's lots of other examples like that. But that is in essence where sustainable property, people think, okay, well, this must be about how houses are built with sustainability more at its core. But actually remember, in this show is about ESG. Environment, social and governance. It's all of the above. Now, on that note, this show is going to be going out live on a Wednesday, once a month, every month. And therefore, in order to make sure that you don't miss an episode, can we ask you to please subscribe to the channel? I want to tell you how to do that so that you'll be able to interact and engage with all of the episodes of the ESG and Tech Show, as well as Fantastic Female Fridays. And Margaret is a regular there, as well as some others of you, as well as Glenn's Trending Thursdays, the hot stock panels and summits and so on. How you do that is, because I'm going to walk through it here so I know your user experience on the phone, is that you need to, first of all, X. So if you X the chat and then you pop back over and then you'll see the word subscribe. It's in red. It's a big red word. So if you pop over there, and particularly if you subscribe to the VectorVest live channel, then you will know any show when it goes live, like this one, as I say, or the others. Now, while you're there, I would also really appreciate, so that we can build the audience for the show, which we're really keen to do, could you also press the like button on this video as well, if you like what you're hearing and the insights that you're getting. And throughout the rest of the episode, we're going to talk about a lot of other trends that are happening within property to make them more sustainable. And then we're going to take you on to the investment case. That's always going to be my formula. Always going to be the format of this show is we're going to take an idea, we're going to explore why it's interesting, we're going to look at the data and the insights behind it, and then we are going to go and take a look at the investable case. That's what we're always going to do. Okay? So if you could, as I say, I'd really appreciate if you liked the episode there as well. Okay, now let's head on back then. And I am just going to make sure that we pop on over there back over there to our screen. All right, now, and let's continue then. Right, now, let's keep going. So when it comes to home automation systems, let's take a look at the primary market there in North America. Good stuff there. I can see that we're all good. Primary market in North America is home automation systems. 66% of North American homes have at least one IoT device. And that's why I was particularly interested to see what devices that you have got going on over there. Okay, let's take a look here at what type of devices they might actually be. Okay, so I'm actually sitting in front of them right now. I'm going to reveal them, but as I do, I'm going to ask you to pop back over there to the chat, and you can tell us which ones of these that you might have got. Okay, so connected cameras. This is where somebody connects CCTV back to a phone or back to some other type of device. Video doorbell. I'm just going to move out of the way there so you can see. Video doorbell. So the video doorbell is where you ring, these have been in houses for a long time, but typically the video would be the other side of the connection in the house, whereas now it's linked to a device. Smart locks, where they could be password protected, they could be based on facial ID. Voice activated light. So asking the lights to come on. And if the other one, and I mean, I remember hearing about this about 15 years ago, is when you could ring the house, and basically if you rang a certain number, well then the voice activated light would come on. Smart speakers, I have to say, it's one of the things that I do every morning is I come down the stairs and I tell Google to turn on the radio. And that is, it's more a personal development thing now, but that is the way in which I communicate to the world, or I ask the world to communicate to me that it's time to wake up and take on the world again. So it's just something that I do, and it's just automatic. I come down, I switch on the radio, and as soon as I hear it, I think, okay, we are ready for the day now, and it's part of my wake up routine. Connected appliances. Now, can I ask you, right? I'm going to just come over here now again. Sometimes people tell me this is kind of freaky, but I just would like to ask you, how do you feel? All right, and please do tell me there in the chat, how do you feel if, like, you know, I get sometimes a notification on my device telling me that it is 6 minutes traffic to my mother-in-law's house on Saturday night at 6 o'clock, let's say. How does it feel? How do you think, do you find that freaky or do you find that helpful? So basically, Google Maps is watching where I'm going. It typically knows that I'm going up to my mother-in-law's house at 6 o'clock on Saturday night, and it tells me that and it gives me the updated traffic in order to get there at any given stage. What do you think? Like, what do you think of when our systems then what generate now is predictive analytics, or when houses or when devices are giving us predictive analytics about what we're doing? Tell me, how do you feel about that? And it's probably going to tell me here that I drink a coffee every day. So is that a good thing? Is it helpful? What do you think? Let's just hear. What do you think? Is that a good thing? Is it helpful? I'm just going to take a look over here at the chat now. Okay. Helpful. Good stuff. Okay. So it's helpful in order to hear what's going on and where. Okay. All right. Yeah. That's good. And it's always interesting to get your thoughts on things like this. All right. So I can get from that, from the point of view of connecting in your appliances, and when various different parts of your different devices are kind of helping you program your life. So far, we are finding it helpful. And S. McClintock says, yes, we're creating Skynet. Okay, that's an interesting way of putting it. Connected, so I'm just going to tell you there about some of the others that I have here. Video streamers, connected thermostats, and automated vacuum cleaners. Okay, now the automated vacuum cleaner, I have to say, I don't have one of those, but you know what? The sooner, the better. Have any of you seen, though, an automated lawnmower? I've seen those all right, for sure, where they just basically mow the lawn themselves all day long, and that they basically go as far as one area and go to the edge of the lawn, and then it just comes around and it just keeps on going. Don't tell him, but perhaps that could be a present for my dad, because I have to say, generally when I'm home, I like to do the grass with him, but I think if we could get by with a little help from our friends. Okay, so these are all the various different types of homes that use these different elements. Now, what I want to do is bring you over, and I'm now going to move over, and what I'd just like to do is I'd like to be able to talk to you specifically. Okay, here we go. I would like to, you saw it in Shark Tank. Okay. What I do is that I'd like to bring you over now to the investment case here, and what we need to think is about who are the companies that are standing to benefit from particularly home devices within sustainable property. Then we're going to take another lens on this, and as we move into the investment side of this conversation. So the companies which invent and manufacture IoT products, and you can look at them there, look at them all. So if you can zoom right in, depending on the type of device that you're tuning in on, you can see the types of companies here. So we have Fitbit, we have Atlas, we have all of those types of companies in from energy. We have Tado, we have Ecobee, we have Enlightened when it comes to smart home, we have Sentry, Locatron, Ecovent, industrial. We have retail there, we have healthcare, and they're probably all at some stage will be moving. All of the healthcare sector will probably have to move into this area at some stage. Agriculture, software and networks, and then of course we have cyber security there as well. So you can see all of those stand to benefit within this particular area. The question is though, is that what about if we were to look at this in the other way around? What about if we were to look at the status quo? What about if we were to look at existing companies that are operating within the real estate world, and we question how sustainable they are? That's the route that I now want to take you on. So let me just minimize my slides here, and I want to open up. I want to bring you over here to the largest ETF provider in the world, namely iShares. So I'm just going to wait there now for you to catch up with me. Very good. I can see that now. We're all in this together. Very good. Okay. Now in here, what I'm going to do is I'm just going to show you how just to look at real estate ETFs, and let's go on a kind of a treasure hunt where we can arrive at this outcome. So first of all, how I got here is I went to iShares. Okay. Next is, as I scroll on down here, I'm going to say that I'm in the US. And I know, by the way, some of you, like Margaret is based in London, and I know some of the rest of you are based in different parts of the world. So I'm just going to go into the US because there's the most amount of them there. Now, next thing is, what I'm going to show you is go to our funds, view all funds. Okay, hopefully you're following me there now. View all funds. And then come over here now to product range, right? I'm keeping an eye up here on the chat too. If anyone has any issues, tell me. Going to click here on the product range. Now scroll on down here, okay? Scroll on down here through the product range and click on real estate, okay? And in here, you will now get all of the real estate, REIT, real estate investment trusts. Now, can I ask, have any of you invested in real estate investment trusts before? Anybody? I have, by the way, I have invested in real estate investment trusts in Europe, for example, but is there anybody else that has invested in real estate investment trusts before? You pop it in there into the chat and I'll be able to see, just so that I can get a sense of whether you'd like me to explain what a real estate investment trust is. Okay, right, I can see that there's been anybody who is answering that, it sounds like, and that's you, S. McClintock, you have. So, right, for the people who may not be aware of this, REIT, R is for real, E is for estate. Okay, so real estate, IT is investment trust. So it's, Harman says yes as well. Great, Harman. You're very welcome here today. So a real estate investment trust is a fund of property. Okay, so it's listed on an exchange like you're seeing here. Margaret says, I'm planning to invest in REITs. I'm finding them very interesting. I agree with you. Margaret. They're a great way of gaining access to the property asset class without directly investing in the asset class. Norm says no. Okay, right. So that's why I want to make sure that everyone's familiar with this. So a real estate investment trust is, just as I said to Margaret there, it's a way in which you can gain access to the property asset class, but you'd buy a fund of property, and then of course the returns, the capital gains of the property, and the rental income that they generate. Okay. However, the focus of this show is the tech and ESG show. So I've given you a variety of technologies there. I've given you a variety of companies that stand to benefit from the increase in the Internet of Things, smart devices that are in homes. But we also need to see how sustainable these property funds actually are. So the question is, do they or are they funds whereby we know that if we wanted to be ESG conscious, and we want to be ESG conscious because we're aware of the planet, we want these companies to do well by society, and we want these homes to be affordable, as well as, of course, we want returns in terms of earnings and dividends. Right, let's take a look at this here then, and let's just see how these funds have been getting on this year, right? So far, real estate this year has been doing pretty darn well, okay? So look up here, look at the first one here, IYR. iShares US Real Estate ETF. Expense ratio on the high side, okay, 0.42%. And then over here, I can see the net expense ratio is the same. Over here, then I can see the 12-month trailing yield. So this is the yield. If you don't know, this is the fund, the yield that they would have had if they held the fund over the past 12 months. Okay, so over 2.05% here. Look at the return. Look at the return so far. Is that it's 22.36% so far this year. Now you can imagine if that was replicated for the rest of the year, you'd be looking at a return of about 45%. And that is, that is pretty good. So if I scroll on down here, in fact, I don't need to scroll on down, just follow this. Just follow where the line on your screen there is grey. Come on down there. Look at the return here of the REIT or EET, it's the global REIT. So if you want global exposure, and Margaret, where are you thinking specifically about the geography of your investment, or are you thinking you want exposure to the asset class and the geography doesn't really matter, you just want as global exposure as possible? Then you can see down here we've 24%, so that's iShares Core US. Now then there's mortgages, where you wouldn't be investing in the mortgages as distinct from the property itself. Then we have multi-sector, international developed real estate, and so on. Okay, so you can see there the returns up at the top level is about 25%. The lowest number that I have here for you is 12.46%, okay? Now, these are the types of instruments that you can use. Now, before I do want to go in and I want to look at the sustainability here, because this is the Tech and ESG show. Sorry, it is the ESG and Tech show. ESG and Tech show. So what I'm now going to do is let's pop on over to VectorVest and let's take a look at them more broadly here. Okay, so here we have IYR. So I can go over here and into my viewer and I can put in to the stock viewer. It's just refreshing its data is IYR, okay? And in here you can see that I can then find all of the details that I might be interested in seeing related to this ETF. And particularly, I'm going to right click here, I'm going to look at a full stock analysis report. You can see that this particular fund is trading currently it's right now, because this is real time, it is at 104.27, right? So you can see there the way that's slightly changing. Okay. Now over here then I can see the industry graph, and I can see obviously that the sector is naturally enough going to be real estate, and then I can see the business description. I can see it has a buy recommendation. I can see that the current value and price are the same, and I can, okay, Margaret is looking at more globally at REITs. Okay, because you can see there that there certainly is the capability for that market. Now, let me come down here. Look at this. So the RT, the relative timing here, this is analysing the stock's price trend. And here, the RT is computed from an analysis of the direction, the magnitude, and the dynamics of a stock's price day over day, week over week, quarter over quarter, and year over year. Now, RT is really good at examining the short-term price activity. Okay, so you can see here it looks at the direction. Above one is favourable, below one is unfavourable. The magnitude is how much it's moving in either direction. And then the dynamics of a stock's price movement day over day as well. So is it really, really volatile, or is it, rice, cool, drinking the Kool-Aid? So I can see here that this is 1.29. Now this is telling me, it's giving me a good idea here that the direction of this has been pretty much to at least, first of all, I can see that it's rising. But secondly, I'm also thinking that it's moving to the top right-hand corner of the graph, pretty steady state. That's what I think. Down here, I can see that its comfort index is very good. So CI is an indicator which reflects a stock's ability to resist severe and or lengthy price declines. Now, this is my second favorite indicator in all of VectorVest. My favorite one is VST, value, safety, and timing, but I just think that the comfort index, it is just such a brilliant one, because this looks at the long-term direction of it, and it points out to you, look at the stocks that are moving from the bottom left-hand corner to the top right, rock steady Eddie. Before I go on now, let me just show you what the top 10, back to viewer here. Look at the top 10 CI stocks. Top 10 CI stocks. Look at this, okay? I'm just going to show you this now. CI stocks over here. Here we go, top 10 of all of VectorVest US. Here we go. 1, 2, 3. Oh, Crocs are in there. Okay, I'm gonna actually, you know what? Let's just take the top 5. And I'm gonna see there if it's coming up. Okay, so I'm gonna ZIM ASO CROX. Okay, so ZIM ASO CROX. ZIM CR what was that? ZIM ASO CROX. Yeah, okay. Now look at the direction of these stocks. Okay, admittedly it's new, but look at that, right? Bottom left to top right. Look at that, bottom left to top right. Look at that, bottom left to top right. That is why I love the CI. And if you keep going, I get you the next two. The next two are TTSH SID. TTSH SID. Okay, did I do that wrong? TTSH, yes I did. And SID. Here we go. So I'm not looking for Whoopi. Sorry, funny name, company. I shouldn't be laughing. Okay, so here we go. TTSH. See, there you go. Crocs. There's TTSH again. Oh, that's because I keep clicking on the wrong place. Okay, forget about that one. ASO. Look at that one. That's ASO there. SID. Bottom left to the top right. So the CI, having a high CI stock is really super Super helpful. Okay, I'm just going to close that down there now. Okay. All right. Now, if we move on there, so yes, sorry, I want to go back there. If you want to analyze anything, right? So I'm just going to put in there on my R again. If you want to analyze any stock, even from the point of view over here of the graph, or like we had open here, you can also use the stock analysis report, which I think is taking a chill pill. So I'll just raise it there again. Here's how you do it, just for anyone who's unfamiliar, is I by R. Now, I by R, and right click and view full stock analysis report. Okay, here we are, and then we'll scroll on down here, and you can see here the CI is an indicator which reflects the stock's ability to resist severe and or lengthy price declines, right? So a CI of 1.33, which is very good on that scale. So again, what I would do here is, if you're considering looking at real estate investment trusts at all, just generally, here's what I would always do, is run a free stock analysis report. If you have VectorVest, you can do this as often as you would like I've been doing. But I'm just looking here. If you look back there to one of the links that was posted, if I could just go back to the guys there in HQ, could I ask you please to just post the link to the free stock analysis report in there, so that then people know how to get access to this if they would want it for any real estate investment trust that we have listed there on VectorVest. Okay, so let me go back over here now, because I want to bring you into the ESG side of things. So let's say, right, Margaret, I'm going to go on your basis there. You were saying you're looking for a global REIT to invest in. So let's say you go and you take a look here, right? So here's REET, and we're going to pop on over here. We take a look at REET. Okay, there we go. iShares Global REIT. And then you take a look in here, and oh, it's actually higher, right? And look at the full stock analysis report. Let's say again, you go down through everything there, Margaret. Okay, so you have your RT. Thanks a million, guys. Thank you. I see there that they've just put the link into the chat. Come on down here, I can see the CI, it's actually even better at 1.37. And let's say I keep on going and I look at the other elements in there. Then the next thing is you question about the sustainability of that particular fund. Here is what you would do, is pop on over here, okay? And when you're in looking at this particular REIT, okay, great, here you can see expense ratio much lower than the one I just showed you a little while ago, 0.14%. Year to date so far, very, very good, 21.03%. Today, the price is at 28.58, so it's slightly up there, 0.46%, okay? And then if we just scroll on down here, we can see the returns here, etc. I'm just going to come on down here. 3.3 billion in assets. Inception date was the 8th of July 2014. I can also see 314 stocks in here. I can see the yield 2.21%. Generally, anyway, I mean, if you're buying property, if one is buying property, whether you're a funder, whether you're an investor buying property, then there is going to be rental income that can come out of that naturally enough. Okay, but down here is then where you can find your sustainability characteristics. And what this is telling me is that it's at a BB rating. So I can see that on a score of 0 to 10, it's at 3.5, and that and we're finding this more and more now here. More and more we're seeing that the ESG coverage of these particular funds is increasingly getting towards 100%. So I can see that the ESG quality score here is about 8.51%. And you can always go in here into any one of these eyes and you can see the comparison. And the funds in the peer group is 329. Down here then it'll say in what it's involved in and also what it's not. And you can see then whether, if you particularly want to run a screen to make sure that it doesn't include certain elements maybe that you might not want included in your fund. Okay, so that's the way in which you can look at the sustainability from that point of view. Let me go on over then. Let me go back here for a moment, and I want to show you, for example, one more thing before I go. I'll just go back in here. I want to show you the holdings, the actual holdings portfolio. Here we go. There we go. So now this is also a possibility of how you can see what types of companies are involved. So you can look at, say, for example, here we have, this is another REIT itself. And all of these are a group of individual, the REITs themselves are individual REITs. And then you can go in and you can take a look at what companies they're investing in. And that's a very top-down analysis. So we're taking the theme. We want to make sure that the stocks that we pick, that let's say if you want to look at those from a sustainability point of view, that you could run your analysis through there. And then you look at then the individual REITs that are within them. And then that can also give you other ideas. If you don't want to do that at all, if you don't want to pick specific REITs that are related to specific areas, you can simply find a fund that does, like a global REIT ETF here, which covers everywhere. Let me just check though. Yeah, here's where you're going to cover everything, right? 67% in the US, Japan, UK, Australia, and so on. Margaret says, wow, that was so helpful. Thank you, Margaret. You're always very kind. Thank you, Susan. So there are REITs within REITs. Yes, there's lots and lots of structures, Margaret, where you have funds of funds, lots and lots of them. But the key thing here, though, Margaret, what I find interesting is the fact that the expense ratio is at 0.14%. But what you also need to be aware of is within those REITs, there can also be inherent expenses as well, which may be reflected in the share price. Okay, so just be aware of that. But certainly, Margaret, you don't have to choose like one particular REIT or one particular fund management company that manages property. You can do all of that within here, within an ETF. Yes, you can. There, by the way, there's very, very few ways there's very, very few things that ETFs don't cover at this stage. Can I run a quick Google search with you, right? I'm just going to show you what happens here. It's interesting when I was researching this in advance of the show. If I look for sustainable property ETFs, you can see there it's already come up. Is BNP Paribas has unveiled a sustainable real estate ETF. Let me see, the HIP sustainable real estate portfolio is here. You can also see that the iShares UK property UCITS ETF is there. That's one particularly for the UK, and since it's UCITS, it's suitable for a retail investor. And Invesco launched a green focused building ETF. Now all of these, here's one, right? 23rd of April. We really want to show you what's the latest, what's happening in terms of the investment world. That is why the show is here. That is why we're focusing on innovative things like technology, but weaving in that sustainability. Norm says, thank you. You've given me more ideas and investment possibilities. Glad to do it, Norm. That's what the show is for. And we're only delighted to do that. And we really hope that you tune in again next month. So in this case here, you can see Invesco launches a green building focused ETF. And this is where, just scroll on down, yeah. The launch of the fund known as GBLD, Invesco expands its relationship with the MSCI and will be the first asset manager in the US to license the MSCI Global Building Index for an ETF. You know why I think this is intriguing, right? And you know why I really love the fact that VectorVest backed me in order to run the show is yet again, what we're seeing is that Europe typically is leading the way in terms of ESG. It's just happening. I just see it happening all the time. Now, on the 23rd of April, we hear a news story that there's going to be a new one in the US, which is the first one to lead the way. BNP Paribas was doing this in Europe 2 years ago. Norm says, is this recorded for later review? Absolutely. It's already, we're streaming it live and it's going to be it is going to be sitting here on YouTube. So as well as the other episode, as well as any other episode of any other show that you're going to see here on YouTube. Yes, it is indeed, Norm, right here for you. And by the way, sorry, another thing, can I just check? And I might just reach out to the guys again back in HQ. There's also a follow-up email that goes out after each one and a follow-up blog post. So, for example, I'm going to come back to you now, S. McClintock, in a second. For example, if you go to VectorVest.com, okay, and you go to the blog over here, and you come down here to stock market investing, you will see, for example, you will see this is a piece that I wrote after an episode of Fantastic Female Fridays here. Now, not sure there why it's not coming up, but anyway, I'm sure it will. Is do companies with gender balance really make more money? And you can see then during the episode there how all of that is described. So there's also a summary as well with each. There you go, and there's the actual link to the show and everything. All of that's in there. Okay, all of that's in there. So what you need to do in order to make sure that you're getting that email is go to VectorVest.com/FFF for Fantastic Female Fridays. It'll also then put you on the mailing list for the show. Can I ask the guys, would you mind there in the US as well? Could you please just pop that into the chat, VectorVest.com/FFF. That is we just want to make sure that you get that. Okay, so to go back to S. McClintock's point, what's going on now is Invesco is going to be the first asset manager in the US to license the MSCI Global Green Building Index for an ETF. Is that generally, when I ran this Google search first, I was doing this earlier on, is that I could see is that BNP Paribas was unveiling a sustainable real estate ETF. But that was back 2 years ago. Is that now when we're seeing, if I was to say sustainable property ETFs in the US, okay, you can see how these are, now look at this, right, is straight away gives me top environmentally responsible ones, okay? Now that's not the question I asked Google. I said property ETFs instead. Here's one, let me see here. This is Xtrackers International ETF. Let me go down here. Popularity of ESG is permeating all sectors, including real estate, and sustainability is becoming a new normal in the sector, which it should, which could spur gains for real estate focused exchange traded funds. There's an odd dynamic that accompanies crisis, and there you can see the development there. Okay, so real estate sector undergoes its industry requirements. Hopeful ETF investors can look to funds and you can see a list of them there as well. Okay, but an awful lot of real estate ETFs real estate investment trusts are focusing on simply property. What I'm saying to you is that it's really important to look out for the sustainability side of this, and particularly when we just a couple of weeks ago how this is now launching in the US as well. Okay, now I am going to bring you back here. Okay, bring you back here, and again, just want to mention to you VectorVest.com/FFF. So for Fantastic Female Fridays, that is how you can make sure that you get the follow-up email with the summary, and also that you're always made aware of the next upcoming of either of my two shows. And of course, if you like the channel, if you subscribe to the channel, you know about everything that is happening along the way. Now, let me see here. Did you see the new Valencia, California construction? 15,000 acres, net zero emissions, 5 large builders building 18,000 homes. I didn't, but that actually is a really interesting case study. I might take a look at that for sure. So thank you. Thank you very much for that. That's a really interesting point. I wasn't aware of that. So I just want to say, as I always do at this stage, thank you so much indeed to all of you for being here. I love working on these shows. It always just does my heart good to be able to work with you and to be able to hear all about what you're interested in and we want to drive forward. We have a whole pipeline of content all the way up to Christmas for this show. So I know exactly what's coming, and you can trust us to be here bringing you lots of insights, but we will always make sure that when we get to the end of this is that looking at it from an investable point of view. What companies one might be looking for, what searches one might be looking for. Bear in mind, what I'm going to be talking about in the show can be quite futuristic. There may not be a lot of, investable ETFs or a search that's already built for it. That's because I'm here to show you how to keep your finger on the pulse and to be able to see what's coming and make your decisions accordingly. As I say, that is what I want to be able to do with you. So I'm just really happy to hear, William, that you love the show. Delighted to hear that. Margaret, thanks again. Susan, she says, a wonderful show. Take care. Thanks, Margaret. We're going to see you again very soon. So on that note, everybody, thank you indeed to everybody who's been watching, who's been participating, and I'm going to see you again soon. Every best wish. Have a great day, and thanks again for being here. We really appreciate it.